We are back talking about investment opportunities for you on the Nairobi Securities Exchange. To help us with this conversation, we have Mr. Geoffery Odundo. He is the Chief Executive Officer of the NSE. Welcome back, Geoffery.
Thank you.
Before we took a break, we had just gotten through an overview of the market and what is happening there. I wanted us to touch on the new products. You launched derivatives. You're looking into futures. Please expound this opportunity for us.
So, as part of our 2015-2019 strategy, we were very clear on where we wanted to take the exchange. And our inspiration was to really build a market that is really provides opportunity, making it a market with basically global reach. And hence, we needed to onboard products that we consider international and that can really expand our offering. And so the derivatives market is the last in the sequence of products that we have offered. We've started off with the real estate investment trusts, came up with the equity traded funds, went and launched Emakiba, and finally derivatives as part of our fourth product. Now, this is a very important market because we believe it's going to be able to address the various concerns of investors. One, a lot of investors take a position in the market, but they don't have a way of hedging that risk. So when a share price goes down, you basically lose valuation downwards. But if you had a contract that was basically tracking that particular downward trend, then you're able then to benefit from it. Like for instance, a sell contract. A sell contract actually gains value as the prices go down, and hence, if you had an exposure in the spot market, you could actually hedge that downward risk with a sell contract.
So I was just looking behind because I was looking at Safaricom, which last week had gone to about 29 and a half, and I've seen it's been recovering now. So would you actually be telling investors maybe you need to actually be selling?
So yes, I mean, yeah, so that's the opportunity again with derivatives. Yeah, you're able to short.
You can short on the name.
Yeah, short means you're able to sell as the price is trending up.
Okay.
And again, wait and take another position.
Interesting.
So it's a very two-directional market. You make money up or down, depending on how the price.
Okay. Maybe I should explore that because Safaricom is closing its books for its special and ordinary dividend on the 2nd of September, and everybody is actually expecting a correction.
Correct.
So that's possibly something to look out for.
Yeah, look out for that.
Okay.
Yeah, so the market has been launched. It launched we commenced trading on 4th of July, officially launched it later on. And ideally what has happened now, we've come up with 5 contracts, mainly around single stocks. So we've got single stocks on Safaricom, equity, and a number of others. And then we've got an index contract.
Yes.
So today, if you want to really get an exposure to the entire market, you can do that in a single contract.
Oh, wow, that's fantastic.
The NSE 25 index contract. Okay. So really, you don't have to buy every share in the market.
You just go and track the index.
Go and track the index.
Okay. I mean, these are all fantastic products, Geoffery. But then, what is the uptick? Because we've seen rates. We haven't seen very good performance. And I mean, I'm asking as an investor and potentially playing devil's advocate. So I'm an investor, I put my money in the rates. I put it when it was coming in, I haven't made money. Then there was the ETF and the gold ETF. And we keep hearing gold is doing much better in terms of an asset class that you want to hold globally. But then we don't see the traction here. And then derivatives. So what is it? I mean, what is your sense? Are we not getting buying from the local institutions? Is it an element of misconception with understanding the underlying opportunity?
Right. I think what we're witnessing is a typical product cycle where a new product comes to the market, takes a bit of time for uptake to happen, and basically you start wondering what's happening. But it's basically, for us, we read this as a normal product cycle. I think when we brought in the REITs, for instance, it was pretty much to address 2 things. One, liquidity. Today, if you want to own property, if you want to sell part of that property, you can't do it. You have to sell the whole unit. But the REIT, you're able to sell a portion of it. The ETF was aimed to address exposures that people can't get into other asset classes, like gold. Okay. You can't buy gold.
You can't buy. But then why is it that people are not?
So, I think it's really the knowledge that has to be continuously built on continuously, the appreciation that these asset classes are also very good investments. I must tell you, I see the REIT as one of the most wonderful inventions we did in this market. I mean, I'm going to own a property today whose value is 20 shillings a unit for as low as 8 shillings. Really, I've got an upside.
That's very true.
So it's that knowledge that we want to continuously bring to people, that 1, you get into a property exposure, 2, you don't have to manage that property, and the yields, you're guaranteed 80% revenue. Okay? on a real physical asset. So it's going to take a bit of time to build that understanding, but I think working with the community that we work with, the traction will be there. We'll want to bring in more domestic REITs so that you're able to see more value out of them. And really we believe that will happen. Derivatives for us is going to be a very, very big market. I can assure you that what you're seeing today is beyond what we expected in the first one.
Oh, is it?
Yes.
What were you expecting?
Our anticipation is that we'll have very few contracts trading, largely people testing the market and the products. Today we have we've touched a high of 100 contracts exposure.
Wow. From the beginning, from the launch up until now?
From the launch date, yeah.
Okay.
Which means that really people have an interest.
Okay.
Now, and that's all retail.
It's retail.
All retail, all domestic.
Fascinating.
All domestic.
Okay.
We intend to embark on a very aggressive roadshow internationally in September.
Okay.
And I believe you'll start seeing more interest coming through.
Okay.
I think our timeline is that in 3 years' time, this market should be able to generate very high turnover compared to the current markets.
Okay.
So we believe that could even take shorter, depending on the appetite. But we believe that it'll address the concerns of really from a hedging perspective.
Okay.
And that's why we tend to see more.
So very exciting. Look out for September when you go on the road show, just to see if you're going to start getting international interest. What about the local fund managers? Are you going to also be speaking to them on your road show?
Certainly, we are very we have actually started engaging with them, and the whole interest is to meet them and to meet their clients who are the trustees and explain to them the value of this product. And most of them are buying into it. I think we have had to really sort of change the thinking around the risks of this product, because I think a lot of people are still in the 2008 scenario, forgetting that those were not exchange-traded derivatives, they were over-the-counter traded derivatives.
That's a very good point.
Now, exchange-traded derivatives are very secure because there's a very clear way in which margins are protected and even how defaults are handled.
Okay.
So I think we have really provided that education. And derivatives is all financial products is about consistent education.
Consistent education and just trying to create. I actually like that you're going out there and proactively looking for demand to create this market. That's very exciting for me. And it gives me, I will certainly now reconsider opening my account. Jeff, very exciting news as well that's coming out from the NSC. Finally, there's an overhaul of the system, and it looks like there are very interesting things that are happening. Please give us an overview and also just an onset of what do we need to look out for and expect once this new system goes live.
So we became an automated market in 2006, and we've been running on the same platform until now. And so we've been having a plan to upgrade this platform to a more advanced platform that can really address more needs and provide us with more solutions. So we've been at this project for about 3 years. Changing a platform is quite a scope.
Very expensive as well.
And very expensive, yeah. But we're finally at the tail end of it. I think it's pretty much soon that we'll now be able to go into a new platform. Some of the things that we hope to bring to market is ability for investors to do day trading, meaning that you'll be able to buy and sell a position within the day.
Can I do it on my mobile phone, or do I have to instruct my stockbroker?
Yeah, that ability will be there.
Oh, wow.
I think today you can still buy shares on your phone,
but there's a
it
delay.
goes through a 3-day settlement cycle.
Okay.
So we intend to shorten that. That's one ability that we believe this system will address. Ability for investors to lend stock. Wow. So under the security lending, so you'll be able to borrow stock and trade in the market.
Are the regulations on that already, have they been passed?
Regulations have been passed. Okay. I think it's more of the model that we want to undertake.
So is that over the next 6 months, 3 months, 1 year?
We're very keen on getting this market in place this year, barring any other factors. And again, high availability, more stability. I know we've been going through certain hiccups when it comes to our trading system, but this is really when a system has been there for quite some time, you expect to see certain strains coming towards the end.
But then you're almost there.
Yeah, we're almost there, certainly.
Okay. I'll just ask a question as an investor on the NSC stock. So has the bulk of this cost already been capitalized, or do we expect another expense item relating to this system?
No, a lot. Over the years, we've been actually taking those costs. Yeah, so pretty much nothing much.
Wow, I'm very excited. I think I'm even losing my track of thought because of what's happening. Okay, fine. So as we're coming to the end of this conversation, what opportunities do you actually see on the NSC today when you're speaking to a group of investors, rather?
I think I'll start and say that we're sitting on a very a very attractive market. Speaking of the spot markets, most of the stocks today are trading at multiples below 10.
Wow.
The average multiple for a frontier and emerging market is anything between 13 and 15.
That's very true.
So if I buy in at 5, I've got clearly an upside. The dividend yields on some of the stocks right now are in excess of 9%.
That's very true.
So again, more competitive than the money markets.
Actually, yeah, government bonds are coming down.
Coming down. And if you just track, do a bit of back testing and see how the markets have behaved.
Okay.
In 3 years' time, in the last 3 years, these markets can even rise more than 20-30%.
And what happens to political risk? Because 3 years takes you smack into the middle of the next political cycle, or rather election cycle.
I don't think that's an issue for this market. I mean, in 2017, on the 9th of August, our markets hit a high of 3,800.
Oh, wow.
So I think the political risk for Kenya is, especially when it comes to markets, is really being managed.
Okay.
I don't think it's a big issue. So that's one. Secondly, Emakiba. We brought you a product here where today is paying you interest of 10% net.
That's a very good return.
For as low as 3,000. Today you can't get I don't think you can get any interest for 3,000 shillings.
Wow.
Now this offer is opened. It closes on the 6th of September. 500 million is available. You can buy 24 hours on the primary market today. When the market goes into secondary market, you can sell real time. I mean, without looking for a buyer. It's all integrated.
It's all integrated. And this is the star 889 hash?
889 hash.
Okay, and what's the name of this particular issue that's running? Do you know?
We've reopened a second reopening.
Okay.
So it's a 1-year paper.
All right.
So it's now similar to a 1-year paper.
Okay.
So if you come in today, you're actually getting 10% net.
What about liquidity? Because people tend to go to the money market because of liquidity.
This is the most liquid product.
Wow.
Because if I want to sell, you can sell real time. We have a liquidity provider in the middle.
All right.
So if today you buy and tomorrow you want to sell, you're assured of an exit.
Oh,
there's no waiting and getting a buyer. It's all interconnected. Yeah.
Okay.
So really, Kenyans, how else do you want to make money?
On your mobile phone.
10% available.
10%
today.
available. Buy it now.
Net.
Buy it now.
Net.
My final question before we go. Jeff, have you made money from the stock exchange in the last 1 year?
That's why I'm still here.
That's why
I'm
you're still
making
here.
money. I am making money.
We want to hear names from the CEO of the Nairobi Securities Exchange. Do we put because you've told us Emakiba and there's a reopen. I mean, do we put our money in Safaricom? Do we go with the banks? I mean, what are your top picks? I don't know if you can answer that question for us.
I cover all companies.
You cover all companies.
So I
Fair
think
enough.
all
Fair
the companies
enough.
are fairly stable.
You have given us some pointers.
Yeah,
We need to look out for the yield and the
I want
PE.
to especially speak to the youth. I mean, we are seeing a great opportunity here. Today, a lot of our youth are not very active in the market. I think there's just about the trick with this market is really taking the move. Don't procrastinate. Don't overanalyze. Just come, identify a few exposure. It's a very affordable market. You only need 100 to buy 100 units of any stock.
Okay.
Some of the units are going for 5 shillings.
Wow.
Really? How then do you begin your investment life?
Fantastic. Right. Geoffrey, is there anything else that you would have wanted us to bring out but we potentially missed out on?
I think finally, just to say that we've also got an onboarding platform called Ibuka. Ibuka is where companies can come and prepare for companies that want to list in the future or access capital market financing. You're able to come and be incubated. Already we have 16 companies, very good companies.
Wow.
And so it's building for us a real pipeline of companies that will be listed in anything between 6 to 18 months.
6 to 18 months.
So it's a very good platform, very, very easy to enter. It gives you immediate visibility, so you don't have to really prepare. You just come in, get visibility, but you start the process of being corporatized over 6 to 18 months.
Okay, fantastic. Thank you so much for your time. There you have it, ladies and gentlemen. It feels, or rather it seems like it's a very exciting time to have a rethink with regards to the NSC. It's trading at a 10-year low. That's not something to be scared of. It's actually an opportunity for you to come and identify what stocks are yielding the highest dividend, what stocks are the cheapest, and actually open your portfolio. And why you need to do this, there's not too much happening on the fixed income, largely because the rates are coming down. And also in closing, there's a new system that's about to go live. There are new products that are out there. So what are you waiting for? You need to be on this bandwagon sooner rather than later. We'll see you again tomorrow, same time, 2:30, Markets Today on Metropole TV. Good afternoon.